Hello everyone, this is Marco from liveforexdaytrading.com and I welcome you to a training video on how to trade with a trend using support and resistance areas. I will not use any indicators here, I'm just using a naked chart with candlesticks to show you how to identify support and resistance areas and to spot possible entry levels. This strategy makes sure you are trading with a trend using a pure price action pattern. Here we have the euro-dollar chart in the 4-hour time frame. The euro-dollar had a nice run up to the 140 level, and at that level it was running out of steam, and while doing so it was forming an area of support which I will mark here. And after a final run up to about 143, price came down and moved past that area of support here. So what we do, we mark that area with a horizontal line. I'm using this swing point here, and we wait for the price to come back and make a retest of that level. As you can see, the price moved down here and made a comeback here, testing that level again, and that previous support level is now resistance. So price got rejected here, moved down, forming a new swing low, which we also mark. Price bounced off here and made a second retest of that level. So as you can see, that former support now becoming a real strong resistance. After the second rejection, the price fell like a knife and fell also through that new support level. So at that point here, we expect also the price coming back and making a retest then of that previous support level, which now showed active resistance. And as you can see, that happened like quite a few times here. So every time the price moves to that level here, we can look for short entries here and trade with the trend. So let's zoom inside and look for candlestick patterns to get us a short entry here. So what are we looking for? Candles which suggest a reversal right at resistance or around resistance. So here we have a bearish engulfing candle. That is a candle that encompasses the whole body of the previous candle. We got another one here, and we got a pin bar candle here, which is also a reversal candle. We got another one here, and the last one here. So all these candles give you a short opportunity. Using this kind of entry, you can also place a very tight stop behind the previous resistance area, and you have a really nice risk-reward ratio. Even the last candle didn't work out like the previous ones. It was still good for some pips here. Euro-dollar broke that resistance line here, but that line stays in place now because we expect a retest of that level, and that former resistance should now act as support. So let's zoom out here. The run-up continued a bit here, and we also tested that former resistance again, but eventually the price came back down all the way to that former resistance, which now acted as support here. And if we zoom in, we also see a reversal pin bar here, which gave a nice entry. So as price made a new high, again we don't take the breakout, we can wait for a retest of that breakout level. We can also mark that swing high here. Also got rejected the first time, but at this time it took the second support here and moved on from here, making new highs. Again used that old resistance here as support, making new highs. So we mark the new swing high again, the breakup, and the price came down, retested that level, and the former resistance acted as support. As price moves on, making new highs, we mark that new high, and again former resistance becomes support. So that's really a great strategy if you're trading with a trend. And I will show you another example in the Aussie dollar, and it will also show you example in the 50-minute chart that you see that strategy also works in lower time frames. Here we have the Aussie dollar in the 4-hour time frame. I already marked all the swing points here with red horizontal lines. The pair was moving in a sideways range here for quite a while, and at that point I broke the channel to the downside. As you can see, we got a retest here of the previous support, and that bearish engulfing candle gave a nice short entry. 2 weeks later, the pair broke the channel to the upside and also retested that level that previous resistance became support. So I marked the high here, and the pair made a higher high, came all the way back. Again, previous resistance became support. Also note that pin bar candle here for a nice entry. Again, Aussie dollar made a higher high, broke that previous resistance, and as you can see, that previous resistance became support. So I will now zoom in the 50-minute chart to show you that this technique also works in the lower time frame. Here we have the Aussie dollar in the 50-minute chart. I mark the swing points with green lines. That red line here is still the old line from the 4-hour chart. The same rules apply here as well. At that point, Aussie dollar made a higher high, came back, tested that old resistance level, and bounced off that level with a doji candle. So we are also looking for some kind of reversal candles in the lower time frames. Here at that point, price broke that previous swing low here, came back, and price moved down from here with a doji candle. As price moved again to the upside, it was breaking that little swing high here. Price came back. We have a pin bar candle here, and the Aussie dollar continued to move to the upside. Of course, every setup fails at some times here. And at some point, Aussie dollar made a higher high, came back here, tested that previous resistance level, but failed to move higher from here. Price came back, fall down, even through that old support here. But that old support line was resistance later on. Here we have also a nice pin bar candle which gives short entry, and here we have a doji candle, also good for short entry, even if it wasn't right at resistance, it was around resistance here. So there's no need to trade the initial breakout, we can wait for the price to come back and get an entry then. So let me explain why the strategy works. The first question should be, why would have an auction have trouble anyway to rise through resistance? It's of course because whenever the price gets to that level, there are sellers, and there are enough sellers at that price and at that moment to satisfy all demand for the instrument at the time. But if the price breaks through that resistance, it is because demand succeeded in becoming greater than the supply. So as price gets higher, a short will get squeezed, and remember, at all price levels among sellers there will be traders shorting the instrument, and they are getting more and more underwater if the price continues to rise. So then of course there will be profit taking from traders who have been long at that point, and we will see a retrace. So and if the price comes back near to the level of the shorts, or to the level where shorts entered their trades, they will try to cover the shorts, because that's human nature. If things are going against us, we try to get out near break even or with a small loss. So these traders try to cover their position, and by doing this they become buyers and adding to the demand for the instrument. So at a prior resistance level there will be a higher number of exceeding shorts than elsewhere, and therefore demand for the instrument will typically pick up as the price drops back to these levels, and this increasing demand may act to support the price. Also keep in mind that traders who are flat know that short sellers want to get out at the point near break even. So since traders who are aware that shorts will cover their position at these levels, they will place orders at these levels and adding further demand and providing support to a falling price, or if we see a price breaking to support, adding pressure again to a rising price. So that is how it works. So hope you liked my little video tutorial here on how to trade with a trend just by using support and resistance areas. If you did, please check out my other videos at liveforex.com. Have a great day. Bye.